Right, everybody. So it is a London session, and today is going to be a dual presentation day. We're going to be having a guest over here, a trader, another trader is going to be coming to give us some analysis about trading NASDAQ and gold as well. But he will soon join us, and then we're going to get started with him as well. So, but right now, we are going to get started with our own agenda of the day. Okay, so let's get to it. NASDAQ. So basically, NASDAQ has been doing wonders. Like, we were expecting NASDAQ to buy yesterday, but it didn't buy. Instead, NASDAQ sell more or more and more. And so that actually potentially now it's giving us anyway this opportunity to reanalyze. Yesterday we didn't take any loss because we didn't enter a trade, so we were waiting for the confirmation. It didn't happen, so we didn't enter the buy trade, and that's a good one because we did not force the trade to happen, right? We waited and waited and waited, and even though it didn't happen, it was okay. So I'm gonna just remove all the zones that were drawn yesterday because right now price has already blasted through them. So I will just take out all the zones, and even not only just the zones, we're also going to take out the swing ranges because NASDAQ already took the 4-hour swing range already. So technically, we need to be looking at a potential new swing range for NASDAQ. All right, so I can immediately see what happens. This is the swing range that we actually have for NASDAQ from here to here, right? That is the swing range. That's why we have it as a 4-hour swing low or somewhere over here. However, yesterday NASDAQ moved, and then blast through the zone, right, up to this point, right? And when NASDAQ did this yesterday, what really happened is that they actually, they are still within the swing range actually, because if you notice that there is a demand level over here, right? And that's exactly where they came to. So they ignored the extreme swing range demand and then went to the one exactly below it. So it's more likely a liquidity concept rather than an invalidation level. So right now, my idea of bias on NASDAQ is actually still bullish. Even as that's what it still does, I'm still very bullish about it. And even though there is still plenty of room for NASDAQ to actually go all the way down, to another demand level that is just a little bit below the zone, So this is another one here that NASDAQ can potentially come, and I'm just gonna mark that one as well. All right, so NASDAQ can also come here if it wants, So, but how do we get a trade today? How we get a trade today is dependent on what happens between now and New York session. So what happens between our New York session is going to help us determine, okay, we are going to be taking a trade now or we're going to be just waiting. So we just need to see and wait. And let's have a look, see. Let's have a look, see. So in general, we have so we're gonna withdraw our, let's see, the swing high is still perfect, the swing low is still perfect. I'm just gonna take out these blue lines. Yeah, I'm gonna take out these blue lines actually, but the swing ranges are actually still perfect. Let me check on our guests. Okay, so okay, so I think let's go to the next steps, which is basically identifying our area of interest, right, for today. And for us to start with that, let's first go on the 15 minutes. On the 15 minutes, we're going to turn on our session break. Let's turn on the session break. And with session break, this way we know exactly what's going on. Then in session break, we are going to be having the previous day high, which is the highest point that price gets to yesterday. And we are also going to mark out the previous day low, which is going to be the lowest point that price got to yesterday. So this over here is the previous day low. And now I need to see the Asian range, like, what was the Asian range for between yesterday and today. I like to see Asian range that look a little bit like this, because it means that price can potentially, anyway, this Asian range of today is very similar to the Asian range of yesterday. So there's a big chance that the sell will continue. Anyway, I mean, like, sometimes it's whatever the market is doing, you just figure it out. Okay, does it look the same? Yeah, maybe they're going to do the same thing again today. So if by New York session we're struggling to break above the Asian high, then obviously we're going to be selling again today. So but for now, we are still neutral on the direction of the market. We're going to be waiting. There is also a chance that from where NASDAQ is right now, NASDAQ can just potentially go, take the high, pull back, maybe even, pull back more. Something like this can actually happen. And so in terms of area of interest, honestly, right now, the only area of interest that we have in the market is let's see, it's still the same area where NASDAQ was trying to move away from, or this one that it just started forming right now, which is also nested into the zone. So here we have the Asian low, we have the previous day low, we have a demand, a potential demand formation here. So if NASDAQ should pull back here and start to give a buy formation, then I think we can actually buy. If we start to pull below the Asian low and start giving a buy character, then I think we're actually potentially going to take a buy from there. So honestly, for now, this morning, I think the analysis is pretty straightforward. We are just going to be expecting NASDAQ to show us what we should do, so that by New York session we will know the direction that it wants to take. Okay. This week we've not really had a trade, and that's quite the news. We've not been able to capitalize on any of these moves. Like, it's been 3 days: Monday no trade, Tuesday no trade, Thursday no trade. Like, Monday was buying, Tuesday was selling, and then it was selling again yesterday. We couldn't get on any of the trades. But hopefully today we will be able to get something, and then we can join the trend or the movement. So and in this case, we will be. So I think that's going to be pretty much it for this morning. London session outlook of NASDAQ. So to recap, we already know where our previous day high is, and then we know where our previous day low is. Okay, and so what we're looking to see right now is, based on where market price is right now, I think that NASDAQ can potentially just take out the high and maybe reverse back into the zone, and then continue selling downward into the deeper demand, which should be the one that should hold, or they just break into the Asian low and then potentially give a buy to reach this previous day high level. So depending on how they do it, we're going to come by New York session, and then we're going to know potentially what they want to do, and then we're going to just do that alone. Okay, and for now, there is honestly nothing much to do. Okay, so right now I'm gonna wait a little bit more time. There is a guest that is coming on this call, so I'm just gonna give him a call right now to see if he's ready, and then we can jump on the call together, and we can actually do we can do another analysis, another outlook from a different trader, and then we'll see. All right, so just let's hold on, and then he's gonna join us. Okay, while we're waiting, we can actually go on to check the news that we have for today. So we have a certain news coming tomorrow. Tomorrow is NFP, which is the first Friday, right? Wow, today there's a lot of news, but they are not like USD news. They are mostly okay. Admit one guest. Oh, okay. So we have our guests already coming. All right, so we are having our guest is coming already, so he's gonna join this call shortly now, and then we are gonna go into it. So I think it's gonna be interesting actually. Uh, all right, so in just like a few minutes, so we are having all right, so it's coming.
Basically, we're talking about just three things that you are looking for in the market. Like the more simple it looks, the more easier it will be to analyze. Uh, that's what I've actually learned so far in this journey. Like
Yeah.
you don't have to complicate things. Yeah, just make it simple and just look for what you are supposed to look for. All right. So now, if I'm looking to buy
Yeah.
in any market,
Yeah.
now these are the things I look for. I look for number one, liquidity sweep. Let me write it.
Okay.
Next. Basically, yeah, we're talking about just three things that you are looking for in the market. Like the more simple it looks, the more easier it will be to analyze. Uh, how come I'm hearing myself back?
Yeah, I fixed it. Let's go.
Is that what?
Yeah, I just fixed it. Yeah.
Okay. So number one, what am I looking for? I'm looking for a sweeping break of shock, a sweeping, a liquidity sweep. So liquidity, liquidity sweep. Number two, what am I looking for? I'm looking for a break of structure. Number three, what am I looking for? I'm looking for Fibonacci retracement. Fibonacci retracement. Now, these are the three things I'm looking for in the market. So, this is the pattern that I look out for.
Yeah, and this
If
you
I'm
trade
willing
you
to
for these three confluence, you trade it for both like gold and any other pair you're looking at.
gold, any pair. Now I conveniently trade any pair now. It is before I just stick to gold alone, all because I love gold. All because gold can actually,
Yeah.
count. So I've only loved gold either ways. But now, since I have my confluence is my edge, and I trust it already because over time I have a very good record with it. So now I trust it. So if like any place that comes my way now, I trade it conveniently now. Basically,
Oh,
I trade
awesome.
conveniently now.
Awesome. Yeah. Let's keep going. Awesome.
Sorry. All right. So what I just explained here. Now you can see that this is my liquidity sweep. This is my liquidity sweep.
Oh,
Now
okay.
this is my new. This is my new break of structure.
Okay.
Do you get it now?
Yeah, I get it.
My new break of structure. Let me write it there. BOS.
Yeah.
My BOS. So what am I doing next? I'm drawing my Fibonacci level. Now, automatically, this is my swing low, and now this is my what? My swing high. So
Yeah.
what am I doing next? After I've I've uh, I've seen my liquidity sweep and the new break of structure.
Yeah.
Now I'm doing a Fibonacci level from the swing low to the swing high.
Yeah.
All right. So what am
Yeah.
I doing next? So once price has given me this number one confluence, now number two confluence, I'm allowing price to come down to this my red zone. This is where I'm
Oh,
taking
okay.
my trade from. So anything that's happening in all these places, I'm not concerned about it. The only thing I'm concerned about to enter this trade is only when price enters This is my red
That
zone.
level, yeah.
All right. It is only when price comes to my red zone that's when I'll start be looking for what's it called, price candlestick confirmation kind of patterns, so that I'll just enter the trade after seeing some kind of reversal patterns and some engulfing candles. That's when I enter the trade to be sure that okay, now buyers are now in the market. All right.
Yeah.
So now after price has given me this particular eye of because this particular eye, what causes the break of structure, it is this particular swing low that is here. So I'm drawing my Fibonacci level from the swing low to the swing eye of the exact of that particular break of structure.
Yeah.
All right. So I'm allowing price to enter the red zone back. Now after price has entered the red zone, that's when I'm looking for buying opportunities to enter the market. Then this is my first take profit. This is my second take profit, and this is my third take profit.
Yeah.
So most of the time, price even passes it and keep trending. All right. But
Yeah.
basically, this is what I'm just looking for to enter any market. Now let me draw the sellers on liquidity sweep, new break of structure, revert back to our Fibonacci level, then expect continuation of the trend.
Okay.
Because this was our swing low before. Sorry, this was our swing high before. Then it was cleared. After it was cleared, now we had this particular high.
Yeah.
After we had this high, now you know that this was our initial low before.
Yeah.
Now this particular high broke down this particular previous higher low before. Then after this particular higher high broke this particular higher low that it was not supposed to break. To break.
True.
Then it gives us our new what's it called, lower high, our lower high, right? So now this causes our new break of structure.
Yeah.
Our new break of structure. Our new BOS. So now after we've seen our new BOS, what am I looking for next? I'm drawing my Fibonacci level from the swing high to the swing low.
Okay.
All right. So what am I looking for next? I'm looking for price to come to enter my Fibonacci, my red zone. Now, I mean, I call this my red zone, my money zone, because that is where I'm targeting to start making money from. So I call it my own money zone. So I'm allowing price to enter the money zone. Then it is only when price enter this particular zone that's where I will start looking for okay, if Russell candlesticks pattern to enter the market.
Yeah.
All right.
Yeah.
Sorry, is it clear now? Like,
Yeah.
is it simple enough?
Yeah. So basically, once you see a low or a high taking, and then you see maybe price reverse back and break a structure. So before you enter, you're basically waiting for like did you say how many percent retracements? Well, let's say you're waiting for price to return back to the discount or the premium zone, and then you can take your buy or sell.
Okay. These are the levels. Although I removed it from showing.
Yeah.
How will I add it back safe like this?
Yeah, I personally understand because even my home fib as well is custom. I remove all the levels. I just have the extreme demand level and the supply level.
Okay.
So
now I use you know that we have our discount and we have our premium in our Fibonacci levels.
Correct.
So I don't use now I don't use the 50 zone at all because in that particular this is our what's it called? So it's not really reliable like that.
Yeah, I know.
So I prefer price to retrace down very well to be sure that okay, now they are willing to now move the market.
Yeah.
So that's why I'm actually using the 0.6 and 0.7 Fibonacci level.
Okay. 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 Clear. So, and that's how you take your trade, and that's straightforward. I mean, that's easy.
Yes, bro. Let's listen together.
Okay, let's check that.
Uh,
So those horizontal lines are your session breaks.
okay, yeah, daily this thing
Range, to know your daily range.
range,
Okay.
daily range, beginning to the end.
Yeah.
This particular blue line that you are seeing is my pivot,
Okay.
the pivot line of the previous day.
Yeah, I get it.
Now, so let's start from here. So, okay. Let's work.
Yeah.
Okay. What are we looking for? Just three things basically. Now you could see that after price gave us this particular high here,
Yeah.
now it was broken. Now this was our liquidity sweep that was, so now I can confirm that this is my liquidity sweep because this particular sweep give us our break of structure. All right.
Okay.
Now after I can analyze this break of structure, what am I doing next? I'm drawing my fib level. Now you could see that price has actually given us an initial high before the initial low. Now this is initial low, and now what give us the break of structure. I hope you know.
Okay. Yeah, I get it. So you're now going to mark that.
So
range.
meaning that I'm not drawing my Fibonacci level from this.
Yeah, you draw it from the
then,
latest. Yeah,
and then I'll
I
be
get
drawing
it.
from this place.
Yeah, I got it.
All right. So this is the high of the break of structure. So what are we doing next? We're allowing price to come back to it. Now after price entered, what happened? We had this particular range to the next day, and we had the dump.
Okay.
All right.
Yeah. Straightforward.
Very simple and direct.
Yeah.
Very simple and direct.
So how often do you think this happens, like in the market? Like,
actually, now I am trading less. I don't trade almost every day anymore.
Okay.
All right. So what I do now is I allow price to just react, just show me what he wants to show me before I pick any trade.
Okay.
I'm coming here. We test very well now. You see.
Okay.
Oh, network, answer me. So where is this one? Okay. Now see our new. Okay, let's talk about this break of structure now that we are seeing here now. This particular one.
Okay.
You can see that price has been trending, right? Because this is good. Those have been trending.
Yeah.
So now this part of scenario now, this is our new break of structure, yeah, and this is our previous low that was. This is our previous low. All right. Now, price has given us initial inner higher high and higher low, higher low. So now this was the initial low that gave us this particular break of structure.
Yeah.
What are you doing there? Doing our Fibonacci level.
Okay, from there. Let's see that.
From here to this place. You can see that now price is not touch this particular line because It is just there. Now, I did being it is 50. I'm using my 50 Fibonacci level now. If you touch
for that particular. But
yeah,
anyway, that's like a extra filter for you to only take trades
yeah,
that reach your level.
exactly. So if it does not reach my 60 level, I'll just be looking at it. Wait, see, now you sabi, just
Yeah.
go. Times that you are not my trade.
Yeah.
But understanding price action really matters a lot. Yeah. Understanding price action really
That one
matters.
said
Meaning that
that one said
yeah. So once you understand what you are actually looking for, then you're entering the market. Like now, okay, now let's analyze this. You can see
Oh,
so this was
this one
our
goes in with your strategy perfectly. Like the dump before the pullback. Yeah, I can see that.
do you get
Yeah.
now see this particular eye after going to this particular eye now we had this particular inner eye that but it was unable to what to sweep it now
Yeah.
that gave him confidence uh, the boldness that okay now but sellers are now kind of active in the market but I'm not still sure yet until I see a break of structure.
Yeah.
All right, so now
Yeah.
after we have this massive
Yeah.
sell-off, what am I doing next?
So you're
Doing my
waiting
Fibonacci
until
level
60 level.
from this particular
Yeah.
eye that caused the break of structure towards to this low. Then what am I doing next? I'm allowing price to react inside it. Then after the particular break, what am I doing next? I'm selling off. But there's a tendency that I'll miss this trade because I'm not awake. I should be sleeping by this time. It's 2 o'clock already.
Oh, so that should be Asian range.
So it will be doing Asian. So
Okay.
that is where I initiated the idea of using price sell limit and buy limit instead of execution. So you just set your buy limit or sell limit depending on whatever you are expecting.
Yeah.
But you cannot do that for gold. Gold is very, very volatile at the moment. So any small movements now is like the pips are crazy.
Yeah. So
Any small movement now. So now let's imagine this now. Okay, you place your buy stop, sorry, your sell stop at this place. Of course, now you should be putting your stop loss above the high. Yeah. Now this is 1,007. This is 1,769 pips.
That's crazy.
So it is crazy. It's not. So the best thing is just to just calm down and then let the thing happen in real time for you. Or okay, like this particular one, it's kind of small. Okay, now this is during
another break.
what's it called? This is during New York session. Now I got the new break of structure. After I got the new break of structure, because this is like a continuation trend already. So I knew that our target is actually this place. So that makes it more easier for me to just know that okay, let me just analyze it. So after I saw this particular that gave us this particular low, what am I doing? I'm doing my Fibonacci level from the swing low. From the swing high to the swing low that caused the break of structure. Then allow my price to reverse back to it. After I do dead it next, I sold off.
Yeah, I see that.
Same thing goes to this place too. I think this was continuation that I did again that particular day. This was midnight. I think I was awake because I was like, why go just they say like this. So now this is perfect. This was on Monday, fresh energy.
Yeah.
So I knew that after that massive sale, because we had more than 7,000 pips drop on gold.
Wow, that's huge, bro.
So I knew that come on, there should be a retracement back, even if at least Siam.
Yeah, wow.
This is 11,634 pips. I was even saying 7,000. Because I shared that it was massive that last week. That selling off was massive. So after we had this sharp sharp reversal, I think that automatically this is my new swing low.
Okay. Yeah.
All right, because this particular swing low, this particular low, break like two structures already by himself, like conveniently. See, if let's break this one.
Yeah. Yeah.
After then he broke this one again.
Okay. Okay.
So that shows a massive, what's it called? A massive buying opportunity already. So in this kind of scenario now, what am I doing next? I will join my Fibonacci level after seeing this particular eye that we have already. But I cannot really, what's it called? Trust this
level.
These particular buyers.
For the
Yeah. Because sellers are still kind of very, very active. So anything people are investing, so they might be willing to add more positions to their positions to sell off more.
Okay.
Because we've been taught that let your winners run, cut your losses short. So most traders, what did they do? They don't just opt out like that. Instead of opting out, most of the time they add to their positions.
Obviously, I mean, if they were selling already and then price came back up, and I mean, you could just have more.
Yeah.
And continue selling.
So that was the reason why. That was the reason why I sold off at this particular place, because I had this particular eye already, and this is my initial low that causes this break of structure.
Yeah.
Now, if you draw it now, you can see that it aligned perfectly with our strategy.
Okay. Yeah.
Now, do you see the reason why I took this sell position now?
Oh, I see your point. I see.
Do you get it now? So, and after I saw this reversal, this thing, I wasn't sure of it again, because I knew that this particular reversal, actually on a Monday did not just continue trend like that. Most of the time, we reverse a bit.
Okay. Okay.
Do you get?
Yeah.
So it might be probably from let's say from Wednesday, then that's when you can now because Monday, Tuesday, Wednesday is mostly for reversals. Then Wednesday, Thursday, Friday is for continuation, or at times we continue from Monday, Tuesday, Wednesday, then reverse from Thursday, Friday.
Yeah.
And at times we trend throughout the week.
Yeah.
Especially what happened for to good last week.
Yeah, it was. That was too much. That was too much.
So happened on gold now. Now we trended from Monday. We traded from Monday because it was a massive buying trending. So we traded from Monday, Tuesday, Wednesday. Now from Thursday morning, what happened? We began to sell off. Now we sold everything, like all the buying things that happened from Monday. We sold everything off, even way more than.
Imagine.
So now that we have this pullback now, so I know that okay, investors, they will not be willing to lose their money again, so they're willing to buy back to this high to continue trending.
That's likely.
So
that's likely. Wow,
this particular cool. Buy.
This is cool.
Sorry, bro.
Yeah, it's pretty cool.
So man. This particular.
Yeah, pretty cool.
This particular trade was taking. This is our 15-minute time frame. Now, if you go to our 5-minute time frame, you would see the old drama that causes this particular buy-off.
Okay.
Sorry, if you're watching from outside Nigeria, sorry, our network is.
Enjoy.
But this does not do less to me, no. What the? Okay. Now, you see that we had a cell break of structure. earlier. Now, what is price did? Price gave us a reversal pattern. After giving us this hammer, we had a Mariposa candle. All right. Now, this particular liquidity was swept. Now, after I swept this liquidity, now we had an initial break of structure. Can you see it now? An internal break of structure rather.
Yeah.
An internal break of structure. Now, this initial internal break of structure, I did not really trust it. Now, if you draw your Fibonacci level from the swing low to the swing high, that gave us the break of structure. You see that price entered our money zone and gave us this massive engulfing candle.
Sure, and the buyer.
All right, showing that okay, buyers are now active. After that happened, then what the price did again? Price gave us an internal break of structure again. Sorry, an internal break of structure again. But what am I expecting? I want price to break this particular previous one. I did not choose this one already, so I want price to break this initial one before I can start buying. All right. So after I had this high, then that was when I drew this particular Fibonacci level, because this was my initial high before. So I drew it and I allowed price to just react and to see some drama. So after I saw this reversal pattern, now you see that price can give us hammer, then this candle is an indecision candle.
Okay, yeah.
Now, an indecision candle, what am I waiting for next? I'm waiting for the next candle to show me the confirmation of the initial indecision. Then we had this massive engulfing candle that engulfed it. This one. Then what am I allowing for again? Even the particular trade ago, I was not I wasn't even awake. I just said the buy limits and I went to bed. And I went to bed and my take profit was around this level. So I wake up to profit.
Wow.
I wake up to profit in this trade. Honestly, I wake up to profit in this trade.
That is sweet, man. That is sweet, man.
So this was where I took my profit. But this particular, but I knew that we are tracing back to our pivot level. Even if you are going to sell off, at least price must come back to the pivot. But me, I cannot wait. Nah, this was take profit level that I opted out. So I didn't allow my distance to allow to come to this place.
Otherwise, you'll have just been some drawdown and the whole
yeah, and again, I think I was awake when price hits the take profit. I would have actually allowed it to start to keep running, but I was not awake. So I just went to bed, putting my stop loss and my take profit levels. So I woke up. I said, "Say price don't touch take profit already." Sweet. So I'm currently on the buy position.
Oh, nice.
Still on gold.
Nice. Oh, okay.
Now, what am I looking for?
Similar concept too.
What did you say?
So that's the same type of setup like the last one you took?
Yeah, same setup, always. Same setup, always.
Oh, that's cool.
Now, this is my initial low, all right, and this is the overall high.
Yeah.
So after giving this overall high, so I allow price to even this particular this thing from here. I wanted to buy from here, but I was not really sure of gold because this particular gold is crazy. Gold. So this particular I wanted to come at least to this particular discount zone, this particular level first.
Yeah.
Start to be sure. Or price will just come down and come and sweep all your liquidity, or to see this as liquidity.
Yeah.
So like that's what I'm actually thinking again. I actually expect price to come and sweep this particular liquidity that is here. So just tap in, tam, then start going up. All right, but there's that tendency that it is trending. There's that tendency that it might not even come down here for. And again, we have NFP news on Friday.
Yeah. Yeah. Oh, good question. So by the way, what's your take around trading news, for example? If you see this setup around
About
news,
what?
so let's say tomorrow is NFP, for example. If you see this same setup right now and it's happening, let's say some minutes before NFP, would you take the trade or would you wait for the news to go?
Of course, I'll be willing to take the trade. It might just be on the minimal risk. But to me, there's nothing like minimal risk. A risk is a risk. So in this kind of particular trade now,
Yeah.
I'll just take it. I'll just see it as, so if it goes my way, I'll see it as, okay, this is actually part of the probability of it going my way.
Yeah.
And if it does not goes my way, I'll see it as a probability of the same thing.
Yeah.
Fine, it might not goes my way every time.
Yeah. Today we have two macros happening, 2:30 and 4 o'clock, unemployment claims and job opening. They make small moves, but it's possible as well to cause some relative volatility.
So far, I won't lie to you. Yeah. So far, what I've actually noticed about this particular way of trading is that I don't just enter trade anyhow anymore.
Okay.
Like now, it has given me the privilege to be patient for my setup to occur. Yeah. So if I don't see my setup, I know that okay, there's no trade for me in this particular pair today.
Yeah, and that potentially increases like your win rates and your risk reward as well.
Yeah, my win rate is like 75 now, actually.
Cool, man. Cool.
My is 75. Cool. But I had a loss on what's it called, on NASDAQ yesterday. I told you now.
Yeah. So if you would trade this on NASDAQ, for example, how frequent do you think this happens on NASDAQ? Because I trade NASDAQ, and then I can tell you that NASDAQ is brutal when it comes to doing. NASDAQ is clean in structure, but you have to be on the higher time frame. So if you're trading NASDAQ on 15 minutes, 5 minutes, 4 minutes, you have to use some discretion because everything moves very fast, especially selling. NASDAQ sell doesn't wait for nobody. NASDAQ sell just goes, But I'll be happy to see how you do it.
Okay, see this particular trade now. Okay, the reason why I had the loss yesterday. I just laughed myself that yesterday. This is my swing low.
Okay.
This is my swing high. You get it now. So price broke everything. But so far my low is still active. I'm still confident. All right. And this is the, that now what I want to draw out with this. This was our initial low, and so you could see that now the same thing is sweeping liquidity. All right. Sure. After sweeping liquidity, we have the massive buy-off.
Yeah.
So breaking how many structures? We have 1, 2, 3, 4, 5, like almost 7 structures already.
Yeah.
With this particular move. So I am so confident that buyers are crazy. They are very, very active now.
Yeah.
Do you get? So now this particular box I drew here is my order block. Was before I trade order block here. So now this is the order block that causes that go field. This is the order block that go field. So if negative price entered this particular order block and reversed again, I gave me this engulfing. Now, after giving me this engulfing, then they started trending. I think I started buying when price got to this place. when price got to this place, then I started buying from. Although I didn't risk much at all. That's honest. I didn't risk much. I didn't risk much at all. I think I did that. I used like I much. It's not $3. I risked. So I was willing to not target the high
The
right here.
high of the high. I see.
Yeah, yeah.
Yeah.
So
Ideally, it's honestly this same setup you have. I was anticipating the same thing yesterday for NASDAQ because on 4 hour, that level you enter the trade is actually the 4 hour swing low itself. So we're expecting that okay, there should be anticipation, like reaction should happen for buyer. So I didn't take the trade because I wanted it to break. If so, when New York started yesterday at 3:30, they started selling. So the highest candle of New York yesterday, I wanted them to break it first before I can actually take the trade. So they did not break it, so I didn't take the buy. And they sell all the way. I was like, what? So I was anticipating
my
a buy
bro,
from
let me
that
not
level.
bust your brain here.
Yeah.
Honestly speaking, that particular loss, I see it as okay, it's actually part of the probability of, like I said earlier.
Yeah.
See, I have every right to actually buy this market yesterday. If you follow my strategy, I have every right. You know why I said that?
Yeah.
This is my initial low, right?
Yeah, true.
Now, after I had this, I have a sweep in liquidity with this particular candlestick.
Yeah, that's true.
Gave me sweep liquidity. So now after this sweep in liquidity, then I had the break in structure, initial break in structure with this particular place.
Yeah.
Then another break in structure again. This was our liquidity sweep.
Again, yeah.
Because it swept this particular loop that is here.
Yeah.
Then we had our new break of structure that is here. All right, but all these things are just internal break of structures that are happening. Now this is our external break of structure. All right. Now this is the eye of the external break of structure. So what am I doing next? I'm doing my Fibonacci level
From there to there.
from here to here. Now do you see the way price reacted again?
Yeah.
Now this particular this Nigeria, it is my other block that got filled. So that's why I drew it out. So I'm waiting price to come and touch it again. And this is what happened. Do you get it now?
Yeah, sure.
This is the other block like this, on a lower time frame. This particular this thing other block is here that got filled, that got swept out. So I'm waiting price to come back to come and tap in from here. So after I got this, I like because me before I enter any trade, of course, I have to align myself with the higher time frame. I can't just be trading from the lower time frame alone without confirming from the higher time frame. So you get. So most of the time, say like I said, price might not even come to our 0.6 level or 0.7 level.
And it just reacts.
It might just be dancing around our 50 level, and I still enter the trade. The reason why you can enter the trade is because of your higher time frame confirmation level that you've known already.
Okay. I think pretty much is what you said. You know, probability. You could just, and another thing about that level now, the market obviously knows that a lot of people are expecting buyer from there, so there's a lot of liquidity again on that level. So they just took it yesterday, and then now they are reacting. But honestly, my long-term overview of NASDAQ is that NASDAQ it's an asset that always supposed to go up based on equity indices. By default setup, equity indices are supposed to always go up because they are weighting the average of the top companies. NASDAQ is US 100, top 100 companies, meaning that we're trading the performance. Every company is always go up. Like every company wants to improve their stock and bottom line. So NASDAQ by default is supposed to keep going up. So it's an asset that's supposed to keep going up by default. So and whenever we are approaching demand levels or demand zones, and that's where most liquidities are. And I think my other question for you and for anyone that's watching is how important is you marking out your Asian range, previous day high, previous day low, when it comes to NASDAQ, for example? Like areas where liquidity potentially are staying.
Okay. Next question, actually. I trade highs and lows, daily highs and lows.
Yeah.
Like now, from Monday, from Monday. Now this is last week Monday.
Okay. Yeah.
Yes. Now throughout that week and last week and this week now, this is our overall high. So now that we have a breakout on a what on a Wednesday, I'm expecting more drop on NASDAQ now. But aside that, that's why I use the Monday, Tuesday, Wednesday, Thursday, Friday kind of template.
I see.
All right, meaning that Monday, Tuesday, Wednesday, what happened Monday, Tuesday, Wednesday? Most of the time they trend. Then from that same Wednesday, I'll start looking for reversal patterns.
Okay.
At times it might not happen on Wednesday that like what happened on good last week now. It didn't happen on Wednesday, it was on Thursday the reversal happened. So people that are still expecting price to keep trending, that don't know how the template works, they will keep buying. But some of us that understand this thing, what did you do? We sold out after we saw the liquidity sweep to the upside. So most of the time, uh, anything that happens on Monday, I'm pretty expecting a breakout from it on a Tuesday. Like let's see NASDAQ now. This was our Monday. This was our Monday, and this was our Monday high. You will see that we had a breakout from it. So these are the breakout I'm expecting. So now, for some people that trade just breakout session now, they will have picked this particular buy position. Does it work out most of the time? Yes, because it just be trending up like that. Now, this is also part of the probability of it not happening on a Tuesday.
Yeah. Yeah.
Do you get? Now we had the reversal on Tuesday, so we had the pump on Monday. Now we had the dump on Tuesday. All right. So now I was actually anticipating a ranging market already after I saw this.
And then there is something I think,
Do you get it
like
this
what
now?
happened yesterday, I think might just continue today or Thursday. You know, even
Yes,
though
now, yes, now.
even though there is a demand,
We
what I
have breakout charge.
if you look at the formation
What
here,
did you
it's
say?
like a drop-based drop. Then right now we're also having another drop-based drop. So like my analysis before you come on the call was that I'm like, what NASDAQ did yesterday is exactly what they are. The formation, usually if you turn on your session break thing, Asian liquidity, sorry, Asian high and low. So basically, what happened yesterday is similar to this formation of today. Like yesterday, if you look at yesterday, they drop, then they base, then they drop. Today,
My bro.
they drop the base, then they will want to drop again. I mean, obviously, but hopefully that's what they will do. I mean, if they sell, I will just try to sell. But
Like I had see you can say that I have my what in this place already. I have my break structure at this level already.
yeah,
And this is the I that causes the breakout structure. So now I drew my Fibonacci level from the low,
okay, from that line, from that area.
from the high to the low, and our price has retraced back to the 0.6 percentage level.
Yeah.
Now I even my buy limit is here already like this. You know, she be smiling.
Yeah, I know. Cool, cool, cool. Is there any other thing you'd like to show us?
Basically nothing much.
Yeah.
This is like my workflow already.
Yeah.
Like
I think it's cool. It's cool.
one thing I'll just say is just that guys, you need to jump up and down. Just keep it simple as always. Keep it simple. Like keep it simple, simple, simple. It is not about finding anything simple for yourself to understand that okay, this is what I'm looking out for. This is what I'm looking out for. This is what I'm looking out for. I've been there that I'll be chasing candles up and down. Okay, I don't say I go for candle. Hey, oh my, don't break this zone. Yeah, make I enter just like that. without even expecting price to buy at a particular level. Don't just enter. Let price to come to your level first before you enter it.
Yeah, very important.
That's like this thing for me. Like,
Very
what do you say?
important. Yeah, very important. Very important.
Now I see reason why why people enter trades from like how people have their sniper entries now. Now I know.
Amazing.
Bro, now I know.
Amazing.
Now I know. Because imagine my sell limit is actually at this 0.6 level already. It's not a sniper entry. Sniper.
Yeah.
But don't do sniper entry. I say beginner, I beg you.
Yeah. Okay.
All right.
Cool. Thank you
So
so
any
much,
other question,
brother.
man, bro?
Yeah, I think we might do a part 2, maybe further down in the year. And I think thank you for showing your strategy. I'm gonna send you the link to the entire video itself. And thank you so much, Isco, for coming. Let's make the money. Let's make all the money this year. My personal this year is I want to see my 100K, and but my approach I want to get. I have a plan to use PropFM to reach, like maybe like $1 million funding with PropFM, and then I can actually then I can now use that to go, to go forward from there. So yeah, I'm hoping that everything is gonna be as we plan. If I can reach like $1 million funding with PropFM, bro, that is going to be like very awesome because
Come on, that's
really awesome.
that's a big, bro.
Most likely like from next week, I'm gonna
1
be
million
starting
1 million funded. Oh, come on.
yeah, I'm gonna be starting a PropFM series on my channel.
So
I'm just gonna be trading PropFM live.
okay.
I'm gonna pick a PropFM account. So everybody's gonna see. I'm gonna trade it live, pass it, get payout, make everything transparent. Actually, the good thing about going live nowadays for me is that it actually it does help me. It does help me as a trader. It gives me more. It gives me. It teaches me more patience because I know that now, okay, I have people watching, and then not only because of I'm not trading because of people, I'm trading because of myself. But if people have to do what I'm doing, then I need to make sure I'm doing like I'm putting in my best. So it's actually so, all right, man. Thank you so very much for coming, and I think we will catch up again. And make sure you enjoy the rest of the day.
Of course, see, I will do this often.
Oh, cool.
I think the way I did it.
All right. Cool. All right, brother.
Yeah, man, bro. Stay great, though, bro.
Yeah. Let's enjoy your day. All right, everyone. So that's the session we that was a session with Isco. Isco is a trader, and he's a very good trader as well. He's making a good one for himself. So I hope you've learned one or two things. You can rewind back the video, and then you can rewatch the session itself. All right. Thank you everyone for coming, and then don't forget to if you want to join the Telegram page for more updates, click on the link in the description and join the Telegram. And then we are going to be trading together. We're going live again by New York session, so don't forget to join us again. All right, and we'll come back and see what NASDAQ has actually done, and then we are going to be trading live again. All right, thank you everyone, and